All right, welcome everybody. We're going to get going here. Thank you for joining us again here at the Mistrade Market Profile Trading Academy and our ongoing monthly webinar series. And today we're going to talk about something that is very important: what to trade, when to trade, liquidity in the marketplaces. And we welcome you all here. We're going to be recording this. We're going to keep it short and brief. If you have any questions, feel free to type them into the chat box, and we'll try to answer those during the final period. Any questions that you may have, type them into the period, into the chat box, and we should be good to go. Just somebody, also let's make sure that everybody has muted their microphones, and I'll try to do the same here. Make sure everybody is muted. Any questions that you have, again, just type them in, and Ryan will try to feed them to me at the end, and we'll try to answer all questions towards the end of the presentation. So with that, let's get going here. Again, talking about markets, what we trade, how we trade, and when to trade, what to trade. Again, we run the Mistrade Market Profile Trading Academy. Thanks for coming again. You can find us at marketprofiletradingacademy.com. I am Matt Davio. I live in Central Oregon. I've lived here for almost 13 and a half years now. I've been trading for nearly 25 years. It's about 23 when I look at it. I've run my own fund. I ran an equities, options, short biased hedge fund from 03 through 06. I worked for a couple other hedge funds in the past, going back to the mid-90s. I've invested in some private opportunities on the technology front. The reason I live in Bend is because it's a lifestyle choice. I moved out here in 2000 after spending most of my life on the Midwest, back in Detroit, Chicago. I've got 4 kids. My oldest is nearing the college years, and I've been married for 20 years this July. So very excited to be here. We started the Market Profile Trading Academy really back in 07. It's had a few iterations, but we've had some just fantastic students, and people come through our program, and hopefully after watching some of our presentations, you're becoming more and more hooked on the trade less, earn more market profile mannerisms that we're really trying to impose and teach. So let's move on to our talk today. Markets to trade, what to trade in the products. Why are we talking about liquidity, and how many of these markets should you focus on? These are the key points that I want to focus on today. So let's get right into the meat of it. So markets to trade. You know, a lot of people go through kind of a popular method of getting into trading. Most people, because of the common knowledge of equities, trade securities, especially U.S. securities first. So most people's first entree into the trading world is, let's say, Apple. And then they get into the SPY, and then they get into some options, and then they get into some different pairs trading, all securities related. The more popular markets that we're going to talk about, and really why we focus on the futures, is we're going to talk about here. So there's basically the securities markets, there are the futures markets, commodities, which really fall under the futures markets, and then there's currencies or Forex. And there are futures that actually mirror the actual spot currencies also. I focus my time right now on the futures markets. All of these have their own characteristics, whether it's taxes, liquidity, how to trade them, where to trade them on the exchanges. And within each of these products, there are multiple layers of products, whether it's options, whether it's derivatives within the futures world, as there is in securities, as there is in commodities. There are generally second or third derivatives on all these products. So depending on how technical you want to get, there are many products within any of these. We're going to focus our time again on the futures commodities markets. So there are a lot of products to trade in all those categories we talked about. Obviously, if you just look at U.S. stocks alone, I think there's something around 7,500 stocks just between the New York, the NASDAQ, and the small cap Russell. You've got over 7,000 stocks. There's a lot of names to trade within that. And then on top of that, you have ETFs. The reason why we like the futures products is because you can pretty much categorize it and simplify your life by breaking it down into the following categories. You've got the financial indices. And again, we're just focusing on US markets. If you want to add to this, you could add the DAX, you could add the FTSE, you could add the Nikkei, you could add some of the Chinese markets. The reason why we're sticking to US is, again, it comes back to transparency and liquidity. So on the US side, again, you've basically got four major products. You've got the S&P, the ES, you've got the NASDAQ, the NQ, you've got the Russell TF, you've got the Dow YM. Now here's what I'll have to say about this. When you're looking at the indices, most of these products basically are mirrors, and they move identically to each other. So unless you're going to start doing some type of pairs or some type of hedging strategies, you really want to focus on the one that works best for you. Frankly, I don't care. ES, NQ, TF, YM, basically all you can see most days are going to move within the same parameters as far as movement. So you're going to see a 0.5% move in the S&P, you'll see the same in the NASDAQ, unless there's something, one stock that's really influential in the NASDAQ, say Apple, that's really moving the entire index. Sometimes that can be a little bit different, but most of the time these things kind of move in concert together. So what I always tell people is focus on one, whether it's the ES, NQ, TF, YM, I don't care. The ES is probably the most liquid, then NQ would be next, followed by the TF, followed by the YM. So the liquidity, again, the amount of volume that is traded in these products is really what you want to focus on. And again, you can see the ES is typically the most widely used and utilized product. We'll get into some details on why I choose the NQ most recently, especially the reason why we've been trading it more regularly is because the price range and the spread, although the points dollar-wise are a little bit different, the spread and the actual points traded has been a little bit wider, and we're looking to take bigger chunks out of the market intraday and multiple day swing trades. So we like the NQ because of the width of the markets that trade there. Next, you have interest rates. Again, you have the 10-year, 5-year, 3-year bonds. Currencies, again, the major pairs here, you got the euro, the Japanese yen, and the Australian dollar. Some people like the loonie now, the Canadian. You can get as far down as you want there when it comes to currencies that have futures that trade. Metals, it's pretty simple. You have gold, silver, and copper are the main ones. There's platinum, less liquid, less transparent. So I focus again on the ones that are more liquid. We'll touch on this a little bit later. Energy, again, oil is the most secure. However, I love natural gas. Natural gas and oil are my favorites when it comes to trading the energy. A lot of people don't like oil because it is so violent, but it is also liquid. And then the grains, the big three again here, corn, soybeans, and wheat. It's pretty simple. And again, just like the indices on the financials, the reason why the grains are so similar is because, again, although beans are different than wheat and corn is different than soy, they all have similar tendencies. So many times they tend to trend together. Not always, but many times, especially during the growing, planting, and harvesting season. So keep this in mind. You probably want to focus on one or two of the grains. You don't need to trade everything when you're looking at your trading life and your lifestyle. And the next product, let's get into why some products are better than others. Why you also need to discern the different personalities, the ES and the NQ. Although I said pick one to trade, may have a little bit different nuances. So you need to understand the personalities, the trading personalities, and match them with the products that fit your personality. So just a quick, brief overview as a trader. We kind of broke this out. Fast and jittery, meaning probably you need to be aware that these products can be maybe a little bit more or less liquid and less transparent. Crude is a great trading product, but it does, it trades more than, say, gold does. But these things can move very wide. In other words, gold recently just broke under 1,300 an ounce, trading around 1280s, I know today. You got to understand that a 1% move is $12 right now, or $13. So it doesn't take much. And if you're trading one contract at $12, which is a 1% nominal move, you've got to be able to handle, say, 3 to 5% in a day. One contract on gold can cost you anywhere from $1,200 to $5,000 in that swing if you're day trading gold. So it's probably not for everybody, and that's why I say it's fast and jittery. Crude is kind of the same thing. If you're trading a full 1 CL contract, $1 move, which again is at $90 is really only a 1% move. That's a pretty typical day. Can you handle a 1%, 2%, 3% move? These are typical moves when it comes to crude. So just one contract in CL moving $1 with you or against you is $1,000. So if that is too rich for your trading capital, either, again, we talk about this all the time, but you better be well capitalized if you're going to trade gold or crude. If you're not playing with multiple six-figure accounts, these are probably not products that you even want to look at, and that's why I put them in the fast and jittery. Corn and beans, things are changing in the grain markets. These used to be, they used to open, on the East Coast at 10:30 and close at 12:30. Now they are opening at they open the same time as the financials, so they're opening at 6:30 and closing at 11. So things are kind of in a transition, and you need to understand also markets, when they open, when they close, how do they trade overnight, how does the Asian markets affect it, how do the European markets affect these products, because they do trade around the clock. Not as much as, say, gold, crude, or the financials, but you need to be aware in how these products trade. Please don't trade them if you've never traded them. They don't trade exactly the same as the ES or the NQ. So I just put that warning and heat out there that you need to really pay attention. Slow moving. Until recently, bonds, both the 10-year, the ZN, and the 5-year, the ZB, have been very slow moving. They tend to trend much like the grains, but they don't move in very wide ranges. So a lot of people like that. They like the slowness, the methodical trade of the bonds. This is big money. I mean, this is probably some of the biggest markets out there are the bonds, okay, interest rate products. Move and stop. Obviously, these are products that are widely used. The currencies, again, euro and yen, these tend to be very mechanical, very, very trending again, and counter trending. So great products to trade if you're into that trend, counter trend type of trade. And the steadiest products, of course, are the financial U.S. indices, ES, NQ, TF, and YM. So that's a real quick overview of what's going on there. Products to trade. Besides the personality of the products that we just talked about, you want to look at what are the daily ranges. Again, when I look for something to trade in the financials, and we touched on this earlier, a 1% move in the S&P or the ES right now is around 16 points. A 1% move in the NQ right now is around 30 points. They're both the same. 1% move in the NQ, 30. 1% move in the ES, 16. I choose to trade that NQ because that 30 points, if I'm successful, I'm going to take a quarter to a half of a day's move out of a market. So that is something that I want to look at, is the daily range. 30 points, yes, is wider than 16 points, yet it's the same 1%. So that's the reason why a lot of times I will choose the NASDAQ, because I don't have to be as precise and perfect in intraday trading. And I'm only looking typically for 1 to 2 trades maximum when I'm trading the financial products. Today, for example, we were long overnight on the NQ, 28.35. We sold it into the open at 28.65.70. We got long again down at 45.50. Rode that up to 60.65. It actually went up to 70 and then settled back down at 70. So our bias today, based on the market profile, was let's be long. Let's look to be long the market, and that's what we did. So again, we're focusing on daily ranges, the liquidity. We didn't talk about coffee, milk, some of the really silly soft products. I call them silly because, again, unless you have deeper pockets, these are not products you should even begin to play in, because the ranges can be very extreme. Also, along with the coffee and the cottons and the cocos and these types of products, consider gold into the same category. And we talked about this earlier. I do not recommend people to trade gold unless you are well capitalized in playing this game. Hours of trade. You need to know when the market's open in the pits. If there is a pit, is it all electronic? What are the margins? If you're concerned and you're playing with a limited budget, you need to know these things. Look on the CME, the New York Bot Exchange. Wherever the products are owned and traded, you need to know what product fits your lifestyle, the liquidity, when the hours are, what the margins are, before you even step into the game. If you've got to be able to answer these questions for yourself before you even get into it. Liquidity. I've talked about this a few times, but why is it important? Bottom line is, futures are, probably the most liquid product out there, in my opinion, outside of maybe a few Forex pairs that you can trade directly. They're probably the most liquid, most traded products that traders use in the world. Think about equities. Equities open at 6:30. Yes, they have a pre-market that opens a little bit earlier. Again, I'm on the West Coast. Maybe 5 o'clock they start trading, but they stop trading pretty much at 1:30 to 3 o'clock is all after hours on the West Coast. So whereas futures basically, especially in the financials, shut for only 15 minutes and then they close Friday until Sunday at 3 o'clock. I want things that I can move in and out of. I can protect myself. There's major markets. There's major players. They're really the analogy that I like to use with people is, do you want to play at the $100, $500 hand of blackjack at Vegas, or do you want to play with the $5 punks who are drunk off their arses and just can't? They're trying to just make their night. They're looking to get whatever it is out of their night. The market will give you what you want. If you want to play with the big boys, and you need to learn to trade liquid products. If you're gonna trade illiquid markets, you're gonna find out very quickly and very expensively what's going on there, and it's really not a place you want to play. I'm just trying to mute some of these people that are coming in here late. Pardon me. So, how many products should you trade? I say this all the time. People ask this question. You really don't need to trade more than one product. If you're just learning to trade, master one product, whether it's the ES, NQ, something very liquid, master one setup within that, learn it, know it, own it. I'm telling you, you do not need to trade a lot to make a very nice living as a trader. I can tell you this week alone, we've made probably 2 or 3 trades for our Twitter members. And with those 2 simple trades, they've paid for 2 years of our Twitter feed. So it's very simple. It does not, I do not and will not and am not a proponent of rapid fire scalping. It's a sucker's game. Unless you have a computer that is programmed and that can do that, you're going to end up losing your money. You'll bleed out. The best you can do is bleed to death. That'll be the best that you can do. So once you've mastered that one product and that one setup and that works for you and your personality, the next thing is to master maybe a second setup that complements your style. Maybe it's adding beans once you've mastered the ES. And it might be the same setup, but within the nuances of the bean market. So if you can just master one product, and that's what we're here to assist and guide you with and help you with, you will know. And the other thing you need to understand is understand your time frame. Again, I'm not going to give you 10 trades a day, and I don't think it's beneficial for anybody to trade that way. So keep this in mind when you are trading, that you do not need to trade all the time to be a good trader. So how can we help you? We've got a live Twitter feed where we provide, again, 1 to 3 trade ideas a day. We've got intraday and swing trades offered within that. Not every day, but we offer some longer term positions. We always discern whether it's going to be an intraday trade or a longer term trade. We also have, we're offering a special right now for $150 to join us. Just just drop us an email and we can sign you up on that. It's normally $48 every 2 weeks. We also have one-on-one mentoring or group mentoring. So again, ping us for that. We offer, if you want to really get into the market profile, how it can be used and developed for your own trading strategy, come trade with us. Or if you want to do a WebEx session for a day, for a week, we can set that up depending on your time and your commitment. So ask us any questions you have, drop us an email. You can write me directly at mistrade@gmail.com. You can see our results at marketprofiletradingacademy.com. And again, thank you all for coming today. And I'm going to try to take a quick look at any questions that there may be here. Thanks, Matt. No, I didn't see that. So everybody else looks like they had sound. Looks like somebody had some problems with the sound, which is fine. Yep, there was a typo in the. So we're going to leave it there. No questions. No questions in the slide deck here. So we're going to cut it. Look for us next week, next month in July for the next webinar. Another great topic will be coming up. If you have any questions, drop us a line at the email here. We look forward to joining you with no nonsense, straightforward results, transparency, liquidity. Trade less, earn more. Peace.